Dear viewers, July 31st, 24, the deadline for filing the tax return is just about a month away. When it comes to question of filing of tax returns and dealing with the income tax department in India, NRIs have got several myths. They live under some kind of an assumption. They live under a feeling that they need to be doing certain things. They should not be doing certain things. They do not come under the purview of income tax when it comes to question of certain dealings. All these things, if you neglect while filing the tax return, it can result in income tax chasing you to sort out this matter, and maybe you are sitting on a potential penalty that income tax might levy on you. In this episode, I'm going to talk to the expert of the week, Chartered Accountant Mr. Sriram Rao, to highlight what are the common mistakes NRIs make while they file the tax return. Stay till the end of the video. Everything that we discuss in this video is equally important, and file the tax returns well within the due date of July 31st and stay on the right side of the law. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the mistakes the NRIs make while they file the tax returns and the common things that are there in their mind which are not in accordance with the law of the land, I have requested my eminent faculty, Chartered Accountant, Mr. Sriram Rao. Mr. Sriram Rao is a practicing Chartered Accountant who looks after direct taxation, a person who is well versed with the taxation of NRIs, a person who has sorted out a lot of tax queries of NRIs in the past. Welcome to this episode, Mr. Sriram Rao.
Thank you.
Mr. Sriram, you file tax returns for NRIs, countless of them. You have been doing this over decades now. You have seen a common pattern with the way NRIs treat certain matters. We also keep getting a lot of queries, and we also try to guide people on the right things to do. For the benefit of the larger community of NRIs, I have listed a few questions today. Kindly provide me the professional answer for the things which people need to know when it comes to question of filing the tax return. The first feeling the NRIs have got is, if they are in a country A, it gets taxed in only that country. Let's say that they have an income in India, it gets taxed in India. And let's say that they live in London, it gets taxed only in London or in whichever the country. Is it the correct assumption, or is there something they need to know about?
Now, before answering your query, let me tell you that the answer which I am going to give is out of my experience in whatever the case which I have handled. Now, coming to your query, your question is, if a person earns a type of income, say, let us give an example that will be better understandable by anyone. Say, a person who is a non-resident as far as India is concerned, and he is a resident in a country where there is taxation. Let us take an example of UK. He is a resident of UK, he is a non-resident in India. That particular person has earned interest income from NRO and NRE accounts maintained with an Indian bank, where it will be taxed. Now, first of all, since this NRO and NRE account interests are earned from a bank account in India, it will be liable for taxes in India. NRO account interest, definitely one has to pay taxes in India. However, for NRE account interest, there is an exemption provided whereby to say that a person who is a non-resident or a person resident outside of India as per FEMA will not be liable for payment of any taxes in India on NRE interest. This being the case, this exemption from taxation of interest from NRE account has been provided only from the point of view of Indian tax authorities. Whereas, if you are a resident of UK, the government of UK has got the right for taxation of your income earned globally. Now, interest income earned from NRO account held in India as well as NRE account held in India, that will be liable for taxes in UK. And you are liable to pay the taxes in UK. Now the question might come whether it is, going to create a double taxation. The answer is no, because of course in India on NRE interest you have not paid tax. You are liable for payment of tax only in UK. However, NRO account interest, that was already taxed in India. You paid the taxes. So the taxes what you paid in India can be offset against the taxes liable to be paid in UK. This is how that concept of residency works. So it is not correct to say that income earned in one country can be taxed only in that country and not by any other country. So the country where a person is a resident has got the right to tax their income earned globally.
Mr. Shirao, when NRIs are dealing in India, there are a lot of times when the TDS gets deducted. Now, in case of interest that is paid on an RO account, when they sell the mutual fund, they come and buy certain vehicle or some assets in India, the TDS gets up. The NRIs have got is that I have paid my TDS. That is the tax that I am liable to pay. Beyond that, I need not do anything. I don't have to pay any more tax. I don't have to take the trouble of filing the tax return and think about it. All my responsibility towards the transaction is done with the TDS. Is it correct, or what is that they need to know about?
No, that understanding is incorrect. The tax deducted source is only for identification of an income earned by a person. It happens to both the residents as well as non-resident. Just by deduction of taxed source, it does not mean that one has discharged their entire tax liability. It will become almost mandatory for any person to file their income tax return in India on whom the tax has been deducted. And coming to non-resident especially, the tax will normally get deducted at a higher rate. So that means most of the time, any income on which tax has been deducted source in India for a non-resident, if they declare that income in India, obviously the tax deducted source in most of the cases will be in excess of what actual tax liability they are supposed to discharge in India. Thereby, the excess tax deducted source can be claimed as a refund by that person. Hence, once TDS is deducted or withholding tax has been done by the payer of the income, then does not mean the end of the compliance work as far as non-residents or OCIs are concerned.
Mr. Sriram, you are in the practicing line for so many years. You have been dealing with NRIs day in and day out. To an extent that when an NRI comes down that you have probably prepared a checklist to check A, B, C, D kind of a thing. From the expertise that you have gained over a period of time and the common mistakes what people are doing, can you list 1, 2, 3, 4 things what NRIs do? Instead of me asking the question from the experience of yours in dealing with the NRIs, can you list those things what NRIs have to keep in mind?
See, I will not say a mistake as such, but there are certain common things which keeps on happening in non-residents because of their, I cannot say that, lack of understanding, but maybe not aware of the tax laws as such. Now, most of the times they are aware that, up to a certain level of income, there is no tax liability. So what they do is, if my income is less than that, then I will not file the tax returns in India. That's what they are thinking. However, that is not correct in many of the circumstances that we have faced. To say that any income which are taxable in the hands of a non-resident at special rate of taxes, such as dividend income, which is taxable at 20%, or say capital gains, which are taxable at 20%, or 10% for sale of shares or mutual funds, etc., or 15% for short-term capital gain from sale of shares, etc. Those incomes will attract taxes in India irrespective of your slab. That means even if you have 10 rupee income, you're liable for the payment of tax on that. But since you're liable for payment of tax on that, you're liable for filing the tax returns in India. So this is what normally one of the common misunderstanding I've got, especially from the perspective of filing the tax return. Apart from that, I can give certain more examples. For example, a person has sold a property in India and he has reinvested the same in, say, bonds or mutual another property, etc. Thereby, there is no taxable capital. That's why he thinks that there is no tax actually is supposed to pay. That's why he will not file the tax. Or say a person who is claiming Chapter 60 deduction, say ATC, ATD, ATDD, ATG on donations, mediclaim or life insurance premium pay, children's school fee, or say repayment of housing loan, etc. Those deductions, certain deductions can be claimed from taxable income. It becomes important for that person to file the taxes. Or say if a person wants to, as a non-resident, he wants to claim lower rate of taxes or say exemption from certain incomes, which is otherwise would have taxed under Income Tax Act, he will claim that benefit of exemption or lower rate of taxes as per Dover taxation governance. At that time also it becomes mandatory for him to file the tax returns. Say a person who wants to claim the refund of excess TDS deducted or tax paid by him, at that time also it becomes mandatory for him to file the tax returns in India. Let's say a person who has got some losses. So he may think that, I've got losses, I need not file the tax return. But it is not so. If you file the loss return, means you will be eligible for carrying forward that losses. And if in case similar type of incomes or gains or profits you get in the next year or subsequent year, you will get an option to offset these losses against those incomes. Thereby, in future, you may need not pay any tax. So that also might happen. To carry forward such losses, it becomes mandatory for you to file the tax. Apart from that, there are certain things such as if one person is maintaining a current account and he has deposited an amount in excess of rupees 1 crore during a financial year, or a person who is paying in excess of 1 lakh rupees per annum for consumption of electricity, which is for various electricity meters what he has got, or say one person who is spending more than rupees 2 lakhs himself or some other person, his dependents or otherwise, for travel to a foreign country. Those persons are also mandated for filing tax return, irrespective of whether they have got taxable income in India or not. These are all certain mandatory things which will have to be taken into consideration by a non-resident or OCA so as to file their tax return. Apart from this, most of the time it is beneficial for a non-resident if they file their taxes. Because what happens is, when you are filing the tax, you will be filling up a lot of other information in their tax return, which will help them ultimately when they try to settle back by coming back to India, etc. So that most of their incomes would have declared, and they also would have declared that they are non-resident. So obviously, by filing their tax returns as a non-resident, it's kind of a declaration to the government saying that, see, I'm a non-resident in India. Otherwise, you will have to again substantiate. Now, obviously, if there is a notice, then one need to substantiate, but it becomes self-explanatory most of the times, if you file your tax return.
Mr. Shira, one of the mistakes NRIs make, and it looks very casual, but it has serious implications. They become an NRI. Their PAN is in a residence tax return. They go abroad and they believe that we don't have it. They are maintaining NRO, NRO. What is the obligation on the part of an NRI to income tax department when it comes to question of notifying them where their jurisdiction is? These are the things that they need to do. Point 1, 2, 3. Can you tell me what are the things? And if they don't do it, where they can earn and what kind of consequences that might follow?
I can sum up your question as updating of a profile of a particular person with tax authorities. To say, it will be very much beneficial for a person to update their correct email ID and correct mobile number. Even a foreign mobile number, they can update in the IT portal. By updating that, all the notifications or say any compliance requirement, etc., whatever the notification in that respect will come to you only. So you will be the first person who will be aware of the situation, what is happening. So it is advisable to have your own email ID and your own mobile number. If required, the secondary email ID and secondary mobile number can also be added to say if you want your chartered accountant or a tax consultant to be aware of that. Apart from that, it is also advisable. What we have seen most of the times with the non-resident especially is every time they come to India, they take one separate mobile number by taking a separate SIM. And say in case if they have that mobile number, they will update that in the portal. Or they go and update that with the Aadhaar. So after they go back, next time they come back, they will not be having that mobile number. Most of the times it creates a very difficult situation for say if you have lost the password, how to recover the password, etc. So instead, if you are having an Indian mobile number, at least for entire one family, maintain one mobile number, Indian mobile number. Link that with your Aadhaar as well as, wherever the IT portal, etc. So that whenever OTP or recovery of password or something like that is required to be done, then you will be having a permanent mobile number with you, an Indian mobile number. It might be very useful for you in times to come. Apart from that, most of the times if the non-resident is not having an Aadhaar, because of non-linking of Aadhaar and PAN, your PAN is getting inoperative. To avoid this situation, it is advisable for updating the IT portal database with your residential status or change in citizenship status. So for this, actually, you have to manually write to your jurisdictional officer, either via email or say a plain letter, and along with your documentary evidence to prove that you are a citizen of a country outside of India or you are a resident of a country outside of India. So it is advisable to update your citizenship and residentship status. In most of the times, it will solve your case of inoperative PAN. Apart from that, if you are dealing with your properties or say you're having transactions in India and you are a non-resident, go back to your profile, IT profile in your IT portal, check where the jurisdiction is. If your jurisdiction is with resident income tax officer, it is advisable to change that to the jurisdiction international taxation officer, under whose jurisdiction you will come. So you'll have to see that where you're situated and better to make an application towards that. Apart from that, it is also advisable to link your PAN with Aadhaar if you are a non-resident and having an Aadhaar. So instead of going for updating your status, update your status in the IT portal, but also link it in anytime it will be useful. Apart from that, your bank accounts, which are actually very much important for obtaining or getting the refund of excess taxes paid, go back and revalidate the bank accounts in your IT portal. It will be very, very useful for you. And every year if you revalidate, if there is an update to be done in the bank account number, or say if you have additional bank accounts, all that can be added in the IT portal. And keep the IT portal password with you also. You cannot just depend on your tax consultant. Even if the tax consultant has registered on IT portal your PAN on behalf of you, you please ask for the password of that. Keep it with you also. Let it be shared with him, but keep it with you. Make sure that your mobile number and your email ID is updated in the IT portal profile, which is also very important. And every time when you file the tax return, please check the ITR form. Apart from computation of income, even in ITR form, one need to mention what is your email ID and mobile number. So that also will be useful, especially nowadays all the notices are coming via email. The notices will be sent to the email which has been mentioned in your income tax return. So it will be very useful if you mention your own email ID in your income tax return as well as in the IT portal. And from time to time, you keep on the habit of verifying your IT portal. You log into your income tax portal and verify your IT portal. And especially in the pending action plan tab, if there is something called as pending action, so under that there will be some notices issued, or there may be some notices issued from time to time. It will be, giving certain indications for you what is happening in the background and what tax authorities are aware about you. So it will be useful for you to be compliant by responding to the notice from time to time.
Mr. Sriram, there is a saying that ignorance is bliss. If somebody questions, the simple answer is, I did not know, that's why I did not know. Is ignorance a bliss when it comes to question of income tax matters? If not, what are the compliance related things NRIs have to keep in mind? Whether they file tax returns, whether they live in India, outside, OCIs, NRIs, whatever it is. Can you tell, for the benefit of my community of audience here, what are the things from a compliance point of view which they must follow or which they must maintain?
Most of the times, ignorance is not a bliss as far as the income tax is concerned. However, if you are a litigator, that means you should be ready to fight at a higher level. At that time, sometimes, ignorance may come to your help. But most of the times, ignorance is not a bliss as far as income tax is. It is better to be aware of what is happening and properly do compliance work as required from time to time. From this perspective, what I have seen is in non-residents is now what is happening is, non-residents don't file their tax returns, or there will be certain information which the tax authorities have. They are actually telling you that I am having this information via annual information statement, which is being reflected in your IT portal. Those information, AIS informations, annual information statement, that is better for a person to go and verify from time to time. So that if there is a transaction which you have not carried out, or a transaction which is having a value which is shown incorrectly, all that can be corrected, or a response against that can be filed. So if any, prevention is better than cure. If you are taking preventive measures in everything, that will always help you rather than ignoring everything. So my advice is prevent. Okay, how we can prevent? You can prevent just by making yourself aware of what is happening and what is your rights and what is your duties from the perspective of taxation or income tax, I can say. You can say that, your duty or right is to file your tax returns in India and declare your income tax and pay the taxes, whatever rightful tax. And be compliant, declare all your taxable incomes in India. This will help you a lot. And whenever if there is a notice which is being issued, etc., You will know if you have already done a preventive measure. Say, for example, if there is some incorrect information in AAS, which is reflected in your portal. You go and respond saying that it is not for me, it is of the other person, or it is incorrect. To what extent it is incorrect, that also can be mentioned. If a response is filed, you can always say, whenever that next notice comes, if at all it comes, you can always say, I have already filed the response. This is my evidence for that. You can always keep all that thing. Then, apart from that, keep whatever records or evidences which will explain a particular transaction with you for a fairly longer period of time, say 10 years, 15 years. Because we have seen many cases wherein, of course, the tax authorities will not have right to reopen an assessment or something like that. But what happens is, most of the times what we have seen is an assessee who will come to know about a particular, assessment order being passed and the penalty or demand is being levied. After 2-3 years, the authority might have passed for order 3 years back, and for an assessment year 15-16, now that is almost 9 years, 10 years old. Now he has come to me saying that there was such and such order for which there is a huge demand. To do a compliance work or exercise your additional right you have under the law, say to file an appeal or file a writ to the court, etc., you will have to produce documentary evidences. So you have to go back for 14-15 financial year transaction and accumulate all that documents and provide. So from that perspective also, it is important for you to maintain your documentary evidences, even for 10-15 years at least, in my view. Even though the tax authorities don't have right to go beyond 10 years in most of the cases, for certain cases beyond 3 years also they cannot go back. Even then, it is advisable to keep records at least for 15 years. And whenever a notice comes, just don't, ignore that, or just don't throw it in the dustbin or recycle bin rather. You always better to respond to such notices with proper explanation along with necessary documentary evidence. I always say, whenever a person comes for a consultation, that we normally don't treat the symptom, we treat the disease. Meaning thereby, a person got a fever, I am just giving a paracetamol. That will just reduce his fever, but the disease will not go. I have to treat the disease, automatically fever will come down. So, in a notice, there will be, that the demand has been raised. I want the demand to be reduced. To reduce the demand, I just say that, such is just a thing against the notice of demand. That will not suffice. You have to see why the demand has been raised. It is against an assessment order which you have to fight against the assessment order. And that and automatically will go. So, you should treat the disease, not the symptom. So, from that perspective, you have to be aware of what is happening. Take necessary consultations, advisory from your tax consultants from time to time, and be aware of what is your position is at any point of time. So, from all these perspectives, it is advisable to take preventive measures rather than ignoring the things.
One myth in the minds of NRIs, NRI bank accounts, the interest that is earned is tax.
Yes.
Therefore, whenever I use my NRI funds, everything I do with NRI funds is tax-free, number one. Number two, because I flow a large chunk of money into my NRI account, nobody can question me because the interest earned is tax-free. Is it true? What is that they have to keep in mind? Can income tax department question anyone for the flow of funds to an NRI account?
First of all, there are two questions. The first question I'll answer first. Any income earned from NRI account, is it exempt? The answer is no. Only interest income earned against NRI deposits and savings bank account will be exempt. However, from NRI funds, if you have invested in any Indian stock market and earned, say, capital gain from sale of shares, or say dividends from those shares, or invested in mutual fund, redeeming that, or say invested in a property, selling that and getting that money back again, earning capital gain from that, will that income earned, say capital gain, dividends or rental, whatever, will that go untaxed because of the fact that source of fund is from NRI? The answer is no. Because that incomes are earned in India. India have not exempted those incomes. India has specifically exempted only interest earned from NRI deposits or savings bank account as exempt. So that's the first thing first. Then the second question is about whether tax authorities can question an inflow of funds into a non-resident external account? The answer is yes, they can question because of the fact that that account is maintained with an Indian bank. They have the jurisdiction over that. So, if money flows into an NRE account, they can always question the source of it. However, it is up to you how you defend. The very first thing that you have to do is you have to prove that you are a non-resident. Once you prove that you are a non-resident, then most of your obligations as far as disclosing the source of income which has been flown to your NRE account will not attract. That means if they ask you a question, there is a bank account which is NRE, for that there are credits. Please explain the source. First you have to prove that you are a non-resident. NRE account, prove it with the documentary evidence. Both of the things. Then you can always say, since I am a non-resident, these funds which I have earned outside of India and liable for tax only in that country, I am not liable for tax in India. Hence, I need not prove the source. You have to explain like this. Rather than if you just say I am a non-resident and this is an NRE fund, they will never accept all this argument. So documentary evidence is very important. They can question you, you can substantiate and come out very easy.
Thank you, Sriram. My dear viewers, when it comes to question of income tax matters, ignorance is not bliss. It's a good idea that you study the subject. It's a good idea you talk to the commercial accountants or the chartered accountants or the people who know about it. It's a welcome step that during your next visit to India, it's a good habit that you walk into one of the chartered accountants who are closer to you. In fact, you don't have to wait till you come to India. These days, everything is online. You can find a chartered accountant who can do a lot of things for you and check from the panel that you have what are the things that needs to be done. If there are areas which need to be addressed, if there are things that need to be rectified or corrected, it's time that you rectify and stay on the right side of it. It may look like a bit of an irritation at this point of time. A stitch in time would save 9. Instead of receiving a notice at some point of time in future, it makes absolute sense for you to attend to these small things at this point of time. Look out for the chartered accountant. If you have one, that's excellent. If you don't have one, NRI Money Clinic has also built a team of chartered accountants as its panelists, and we have made known that if somebody is looking out for chartered accountant services, you can reach out to us through a WhatsApp message. Our numbers are given in our description box below. Just check the description box below. The number is given. They have also provided a link there. Click on the link. It takes you to the WhatsApp. Send us a message that you are looking out for chartered accountant services. We will try and find out a chartered accountant who is closer to you. So do not delay. Stay on the right side of the law. File your tax return. It makes absolute sense for you to file a nil tax return if you have no other incomes. It makes absolute sense for you to have a relationship with a chartered accountant who can attend to all these things year after year. So I wish that you be on the right side of the law and let there not be a day where a notice is served on you. Thank you, Sriram, for all these points. And I'm very sure my audience is enlightened with these small but very important steps. Thank you very much for your kindness to our program and educate our audience. Thank you very much, sir.
You're welcome. You're welcome.
Dear viewers, hope the episode that I have done today helped you to understand from the point of view of income tax department and your compliance obligations, what are the things that you need to attend. If you got the complete information on this, do not forget to give me a thumbs up. Your subscription matters for us. A lot of you watch my videos but forget to hit the subscribe button. May I request you to press the subscribe button right now and press the bell icon. Do not miss one single video which are value-filled, which we produce for you. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another topic, with yet another expert next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.